Okay, so the markets, as you can see, were moving in sync. They formed troughs on a same day. However, according to these two analyses that I'm showing you, there were different troughs. The Australian market dropped a little bit lower and formed a lower trough on the 9th of August than the trough that it formed on the 4th of October. So the big question, the burning question in all Australians' minds, or anybody who's analysing the Australian market, was how should you correctly label or mark or in the Australian market. Let's see, where was I? I was on the shift 54 months. Here we go. As you can see, according to this analysis, the most prominent trough has been marked as the 18th of, I beg your pardon, the 18-month trough on the 9th of August, whereas the 4th of October was only an 80-day cycle trough. Of course, there is about an 80-day cycle length in between. There is a distance of 56 days, which is close to an 80-day cycle, the average length of which is 68 days. If that seems confusing, if I'll answer that question. If it's confusing, let me know, and I'll explain why an 80-day cycle has an average length of 68 days. Okay, so in my opinion, I believe that the 18-month trough would be better placed here on the 4th of October. Why? Because markets around the world were experiencing their major trough on that date. Not only that, the lower price that was achieved on the 9th of August in 2011 in the Australian market was achieved in only 1 day. And that, I believe, is a sure sign of fundamental interaction. If we remove the price action on this single day, okay, then we would not have a more prominent trough on the 9th of August. Okay, if the price had come down just a little bit lower, then we probably would be saying, oh, that's clearly a trough of the 80-day cycle, and the 18-month cycle is happening here on the 4th of October. Okay, so a trough which is formed by the very dramatic price movement of a single day, I don't believe is a valid placement of a trough. So let's take a look, however, at this analysis, and assume that we don't shift this 18-month trough over to the date in October, which I believe is more appropriate. And when you have a look at the chart, you can see how dramatic that 1 day price movement was when we look at this kind of scale. I'm sure you can all see that there. You can see that shadow of, let me just, there we go. You can see that shadow, which is the sort of grey bit of that candlestick. You can see that shadow stretching right down below there. That's a sure sign of some form of fundamental interaction. Something was happening in August on that day. And I was a bit of a panic because the market had, as you can see, fallen very steeply beforehand. One of the dangers with living in Australia, and I know this because I spent most of my life living in South Africa. One of the dangers is that your stock market opens long before the US stock market. And although we don't like to believe that the US market has much impact on us, what I found in South Africa was if the market had been falling dramatically for a week or 2 weeks, as is the case here, before Monday or Tuesday open, those Mondays and Tuesdays at the beginning of the week can be very dangerous periods, because we're all waiting to find out what's going to happen in the American markets, or certainly it feels like that. We're all waiting to find out what's going to happen. So there often is a tremendous degree of panic. So I believe that price move on that single day, if we cross it out, you can see it looks a little more sort of realistic. But that price move can be accounted to fundamental interaction. So I believe that the 18-month cycle trough shouldn't be placed on that day. But let's just have a look at this analysis. The great thing I love doing all the time is looking at all kinds of different analyses and saying, well, what's happening now? Could that be what is actually playing out at the moment? Okay, this is a perfectly reasonable analysis. If you try not to look at this this very prominent now bar here, a single day of fundamental interaction. If you try not to look too closely at that, then this analysis looks fairly reasonable, and maybe this is what is playing out. Okay. So I've got about 25 minutes left on today's trader chat, so I'm going to spend the rest of the time talking about whether this is a reasonable analysis, or whether maybe what's happening at the moment actually suits the better placement of the trough on the 4th of October. So if we have a look at this analysis, first of all, as you can see, I've got the 20-week projection boxes displayed up there. So in fact, what this analysis is saying is that price is moving up towards this 20-week projection box, okay, which is expected just above the level of 4,500. Now, that's possible. It's perfectly reasonable, and at first glance, it looks as if though that is exactly what is happening. But I believe that before we say, okay, great, we're rising up to that level, I think it's important to have a look at the analysis and say, is the analysis that has generated this particular projection, is it valid? And the first thing I do whenever I have a look at an analysis is I do a very simple thing. I look at the most prominent troughs, and I have a look and see how prominent was the price trough that trough is linked to. So by looking at the most prominent troughs, I mean I look at the big piles of diamonds at the bottom here. Here is a pile of diamonds representing a trough of 40-week magnitude. So that's quite a long time. Think about that. That's 9 months, okay? That's a 9-month cycle trough, which according to this analysis occurred in early April. I think that's the 10th of April. Okay? Now, if you have a look at that in price, my first reservation with this analysis is that it just doesn't look right to me. This formation of this trough here and the bounce out of it just doesn't look right for a 40-week cycle trough. Maybe the bounce out, yes, the bounce out has been quite good, but it just doesn't really work for me. And that might seem like a funny way of approaching something as complex as cyclic analysis, but in fact, that's really what it's all about. The true sort of treasure of knowledge that Hurst published was in his cycles course, which proposed a way of identifying or performing an analysis on a market, identifying the cycles and the position of their troughs. And the gem of knowledge in there is that you need to use your pattern recognition abilities as an advanced human being to make very complex decisions and to resolve very complex dilemmas. So we have a complex dilemma here. We've got a very long-term cycle, a 40-week cycle, 9-month cycle that should have been rising up and then coming down to form a trough. Okay, in its most simplest form, that 40-week cycle, which according to this analysis formed a trough on the 9th of August in 2011, should have gone up, formed a bit of a semicircle, and then come down. It could come down and bounce out of a lower level, but it just doesn't look very good to me. Okay, when you start drawing semicircles and price cuts through those semicircles at right angles, it tells me there's something not quite right with the analysis. So that's my first reservation with this analysis. My second reservation with this analysis, as you know, is the placement of a trough on the basis of a single very extreme day's price move. Okay, so I don't feel terribly good about that. There is something else that I don't feel very good about in this analysis, and that has to do with the placement of this 80-day trough. Let's look at this 80-day cycle trough. We come up here. That 80-day cycle trough on the 30th of January 2012. The 30th of January 2012 was a trough in markets around the world, but it was a really subtle, very small trough, as you can see. Now, looking at that, one might want to describe that as what's called a straddled trough. For those of you who know what straddled troughs are, yes, that might be a straddled trough, but of even greater concern to me is the shape of the 80-day cycle that follows that trough. You will know that I'm obsessed by cycle shapes because I believe cycle shapes hold the key to cyclic theory. So let's have a look at the cycle shape, and I will just simply draw over price. Here is that cycle shape. It goes up, down, up, down. Okay, that's the cycle shape of that 80-day cycle. Those of you who know about sentient trading methodology will identify that immediately as an inverted cycle shape. An inverted cycle shape means simply that the middle point comes lower than both the start and the end of the cycle. Now, an inverted cycle shape is an indication of a weakness in the analysis. It doesn't definitely rule this analysis out as being impossible, but it's an indication of a weakness in the analysis. And in the longer that cycle, longer the cycle is that the inverted shape happens in, the greater a warning it is. And there's a very, very easy way of viewing the inverted shapes. You simply turn on a sentient trading methodology if you have the trader edition of Sentient Trader, and as you can see there, it tells you what all the shapes of all the cycles are, and it tells you there's an inverted bull shape at the 80-day cycle level. So for these reasons, I'm not very keen on this analysis. However, I've said it many times, an inverted shape, even at the 80-day cycle level, does not mean that the analysis is impossible. Neither does that very dramatic day on the 9th of August mean that this analysis is absolutely impossible. Okay? It doesn't mean that this is a completely faulty analysis. Some of you out there might be swearing by it. I'm sure when you get together and have what you call them in Australia, barbies, or dinner parties, and you're all talking about the markets, as I know you all do over your dinner parties or your barbies, or what are they? I think they're barbecues in Australia. No doubt some of you might be promoting this particular analysis and saying that this is what you believe is happening. And certainly if you've been doing that, you would have been looking fairly good recently, because of course price has been rising up into this 20-week target box. Okay, after which it